I am not going to sit here and say that the bottom is in, we've reached the bottom range. But what I will sit here and say is we've fallen below the 786 line. And for me, from a macro perspective, that is everything. We've reached the bottom range. And so right now, I can sit back from a macro indicator, and we've been watching this indicator for years on this YouTube channel, and I can say the bottom, it could be in. I don't think it is, but it could be now. I've been waiting for this to happen. It's happened. And what I want to talk about is the fact that we're in a bear market still. We're still in a bear market, and we need to anticipate bear market things. I'm going to keep saying that till the bear market's over. We've had absolutely no confirmation of a bear market being over right now. So we're going to keep saying anticipate bear market things. When we say bear market things, we think of red candles to the downside. Just crypto keeps falling. Bad things keep happening. The other thing that is a bear market thing is this. It's called a bear market rally. Are you ready? Are you ready for a bear market rally? Because we might be getting one. I want to talk about why that is. Kind of comes off the back of all of the news we've been seeing. A weaker than expected inflation report last week triggered the biggest rally markets have seen in months. We saw the rally take place. We go over here to an S&P 500 index chart. Look at this rally. This is from mid-October. S&P 500 just rallying back to a lower high resistance area. Unfortunately, because of everything going on with FTX, that whole fiasco, crypto missing out big time on, so far, what probably would have been a pretty nice bear market rally. Crypto has missed out on it. And you can even see the US dollar currency index has been falling. Crypto has missed out on that because of this micro zoomed in event. And it's not a good event, the FTX and the fall of FTX. Not a good event at all for crypto in the short term. But as the dust settles, I think there's a very large case that crypto might catch up to all of this. We see US dollar currency index falling. We know risk on assets like crypto rise when this happens. That hasn't happened really yet for crypto. So we're going to monitor that now in this video. We're going to break down on the Bitcoin charts what a rally could look like, the zones that I'd be watching. And just note this, the Bitcoin chart, even if you don't hold Bitcoin, is important. The Bitcoin chart kind of acts as a roadmap for crypto. It has the most data, and from a macro cycle perspective, Bitcoin really is that roadmap. So if you're holding altcoins, this is important. This is extremely important information and data. So we know what happened with CPI data looking nice last week. We've been tracking this story. This is Trueflation, the on-chain data, which gives us a different perspective of inflation, right? And we've seen this top out in March, and we've been tracking this as a leading indicator, multi-month leading indicator before actual data comes out, right? And we've been tracking that, and this continues to fall right now. And this could be a really good sign for CPI data even in the coming months, right? This could be a really good sign for basically the macroeconomic layout. So here we are with Bitcoin, and we're kind of like, man, Bitcoin just went through it really, really bad with FTX. It actually fell below the 786 line because of FTX. If you're unaware of the 786 line, you all know it's this macro Fibonacci Bitcoin has fallen below in previous cycles. Fibonacci, very simply, meaning a swing low to a swing high, back down, retracement, just around 78% back down and below to its bottom range. This is what happened in the last bear market, 2018. Now, one thing on this chart I want to point out, in that 2018 low, we're going to look at 2015, is this. When Bitcoin exited that range finally, and you can see it was in that range for months. When it exited the range, it broke above the 20-week and ultimately broke back above the 50-week. A huge, huge macro indicator. Both of those moving averages, the 50-week, the 20-week. Now, the same thing happened all the way back here in 2015. Bitcoin was in the bottom range, broke above the 20-week, broke above the 50-week, and you can see, there it is. It's a macro shift. We're going to continue monitoring that macro shift, but it's months away. Right now, if we look at the Bitcoin chart, you can see the 50-week moving average all the way up here around $30,000. The 20-week moving average around $20,400 or so. What's good is we got this fall away from the 20-week moving average for Bitcoin, and we want to see that overextension in a bear market bottom. So it's good that we got that indicator and the fall away from that indicator. But just like the story goes on any time frame, and here we are on the macro, the weekly time frame, we get the pullbacks. We get these moves back to those indicators to retest those areas. So for a Bitcoin rally to happen, I'm immediately watching this 20-week moving average in green. This is an area that we just saw Bitcoin fall away from below the 786 line. We're in the bottom range. We're going to monitor that, but a pullback to that area. Now, what does that look like? Is that an immediate pullback to $20,400? No, not necessarily. We get some clues in the shorter term on the daily chart. Let's watch now on the daily chart what's in play. If we go here, we can look at a couple areas. Number one, here's our 786 line. It is just above where Bitcoin is right now. It will be extremely interesting to me to watch this. If we go to a 6-hour chart, check out the 786 line right above $17,000. This was the macro area I've been waiting for Bitcoin to fall below. It fell below it, and now let's see if there's any resistance there. It's going to be very interesting and intriguing. That's the first area of resistance. It is directly above where Bitcoin is by like a few $100s. Now, going back to the daily chart, here's what I'm really looking for if Bitcoin breaks back above the 786 line. This lower trend line area confluent with this upper trend line area of this recent triangle that Bitcoin broke below. That's the immediate next range we're looking at right around just above $18,000. What's interesting with that is we have these key moving averages on the daily just above the 20-day moving average and the 50-day moving average, which are essentially right now just intertwining. They're just above that confluent trendline area, just above $19,000. And so all of this area right here for Bitcoin is resistance. That's a resistance area, but that's the area where we might see Bitcoin rally. To the upside, we're looking at around up to like a 10 to 15% rally for Bitcoin. This is the rally that I think is in play off the back of everything going on with last week's CPI data, with US dollar currency index falling, Bitcoin not getting to enjoy that rally just yet. I think Bitcoin might catch up. And we see that often in all markets, just markets moving first, right? And it's not always just in perfect confluence with each other. So here we are, 10 to 15% move to the upside, but it's a move that I think we should be very careful of if Bitcoin makes it, because there's resistance there, meaning we could get that nice little bear market rally to the upside, and then it could just see resistance, kind of come back down. All the while, if we go to the weekly chart, we might see the 20-week moving average being pulled into that rally, and Bitcoin, what does it do at that resistance? That's what I'd be watching. And on the short term, that's kind of what I am watching, right? There's nothing more we can do. It's not like we're going to have this rally that leads us into a bull market. We're not there right now. We're in key territory. These are the volatile waters of the bear market bottom that we are in right now. So we can watch and analyze Bitcoin as it interacts with those waters, maybe making some hops, maybe some splashes, maybe, you know, just kind of like a dolphin jumping out of those waters, but potentially falling back in. This could be a multi-month bottom range. How low does Bitcoin go in this range? That is up for debate. I know I'm anticipating more of a bottoming out along this range. We looked at on this weekly chart, we looked at the time frame that Bitcoin kind of traded within these ranges. 2018, 133 days. We go to 2015, it was 301 days in that bottom range. And if you look at the Bitcoin chart, as we've been noting, Bitcoin just got into that range. So we can anticipate a rally to the upside in the short term, but I'd also really anticipate further downside and kind of trading within this bear market bottom range. And that's what I'll be watching in the short term. We'll keep an eye on S&P 500 right now, putting in a Fibonacci lower high potentially. It's hitting that Fibonacci resistance, and that is swing high to swing low, back to this lower high resistance. Will the rally for traditional markets be over soon? It's something that we've seen this entire bear market. Here was a Fibonacci lower high resistance. Here was lower high resistance. Are we getting another lower high resistance in the middle of this bear market? Is it all just a bear market rally? It's a bear market, so we should anticipate bear market things like that. And that's what I'm doing. So I appreciate you coming by. Please hit that subscribe, hit the like. I'll see you in the next video. God bless.